Yo, what's going on? It's Caleb. This will be trading day 7, I think. I'll be going over some internal liquidity, fair value gaps, liquidity sweeps, order blocks, everything like that. Let's get into it. To start off with a fair value gap, we're going to do a bullish or bearish one first. You're going to mark out at the bottom of the first candle and then the top of the third candle, right? That's what a fair value gap is. It's 3 candles with the one in the middle creating a gap, right? For a bullish one, like the one I just did, right? You're going to mark out the top of the first one and the bottom of the third one. They're almost the exact same in principle. Bottom of the first one, top of the third one, top of the third one, bottom of the third one, right? What a fair value gap means or why it works, it's like a price magnet. Price likes to come into, like I explained in the last video, internal and external range liquidity. Price loves to, as we see right here, come into the fair value gap and try to retest it. What do I mean by retest it? It likes to come into it and see how strong is this fair value gap? How much liquidity is held in here? Will this fair value gap be a support zone or resistance zone, or is it going to get inversed, right? It's a price magnet because price is drawn towards it to see if we can retest it or break it, right? Fair value gap size doesn't really matter. So there's all types of sizes for fair value gaps, like this. It's a nice big fair value gap. The one we just made before, smaller fair value gap. Maybe even something like this. You could there's multiple possibilities with fair value gaps. That's incorrect. But there's a lot of possibilities with fair value gaps. And it really doesn't matter on their size. Obviously, the size means it might be a little less strong because there's a lesser strong movement that's creating the gap. But yeah. The next thing I should talk about is liquidity sweeps, which is when you have a low and a high marked out. And what we're waiting for is for either that low or that high to be swept, depending on our bias, right? Usually done on a higher time frame, like a 15-minute. I suggest do all your liquidity sweeps on 15 minutes. You wait for a breakthrough of the high, which causes price to go up or down, right? The reason that they work is because some people will place a short position here, thinking that it's not going to break above our high that we have, the high that we have. And in the end, we break above that high, which leads to an excess amount of liquidity. Like I talked about before, there's that bubble. The wick is the stick, poking through it, breaks the liquidity, right? And it has to go somewhere. So for example, this one right here, we had our high and our low. We had a liquidity sweep right here, just at 745. Price went down, probably tapped into some sort of fair value gap or something. Price tapped up, could have made that trade, right? You always look for a liquidity sweep before you trade. Don't trade without a liquidity sweep. Never trade without a liquidity sweep. You always need to look for a liquidity sweep and then a break of structure. And then you spot your breakout, get your fair value gaps, right? Market a high and a low on a 15-minute. Wait for it to be broken through. That's liquidity sweep. I'll link another video to it. Third thing, order blocks. Order blocks are basically the small little movement before a huge down movement, like what we have right here. And what it means, and I guess what it represents, is either a supply or a resistance zone. It means that it's an optimal price for sellers to sell, or an optimal price for buyers to buy, or just the hedge funds, right? So usually it'll act as either a supply or a resistance zone until it gets broken through, right? So the small move before a big drop. I think we have another one. Yeah, you could see another one right here. Right, and we're kind of fitting through this zone. Like we haven't fully broken out of this. There's probably some with an uptrend here. Yeah, gonna move here. Don't know if we broke through it. I don't think we have. No, we did. Right, but those are order blocks. Small little movement acting as your supply resistance zones. I'll go over those as well. Yeah, let's do a little pop quiz thing. What do we see right through here? These candles. What do we see? Fair value gap right here. Right here. Tiny little John. That's a fair value gap. What type of fair value gap is it? Bullish fair value gap. See if we can find a bearish one. Boom. It's right here. Is it? Maybe. I think it's really tiny. The tiniest fair value gap ever. But bearish fair value gap. Right? Again. What do we have here? So we're going here. And here. What do we have? What's right there? Liquidity sweep. Right? What does the liquidity sweep cause? Big down into a bump, into an up. We might have actually just hit the fair value gap. Right? Maybe. Yeah. See? That's exact thing. That's exactly what I'm talking about. Tap external liquidity, bring in price down to our internal liquidity, tapping us back out. There you go. What do we have right here? It's an order block, right? I think we get the gist. I'll link some videos in the description towards all of them, or better examples of all of them. Hope you enjoyed. Hope you took notes on this video. Next time we'll be going over proper risk management. Bye.